This is Alan Bush with the Daily Financial Forecast for Thursday, January 18th. Stock index futures are mostly higher this morning and performing better than the news would suggest. We did have housing starts coming in at 1.46 million when 1.425 million were expected. Also, we had building permits at 1.495 million, and that compares to the estimate of 1.478 million. Also, a bit of a surprise on jobless claims coming in at 187,000. That compares to the guess of 206,000. In the one negative report, the January Philadelphia Fed Manufacturing Index coming in at negative 10.6 when negative 6.7 was forecast. So the fundamentals and technicals still remain supportive to stock index futures, even though there is more talk of a less accommodative Fed later this year. And in the currency markets, the dollar index trading a little bit higher this morning. Also, recent gains in the greenback, I believe, are due to changing interest rate differential expectations, which are now favorable to the dollar index. And it does look now that the dollar probably has bottomed. We had construction output in the euro area declining 2.2% from the previous year in November. That is the sharpest drop since February of 2021. Also, we have central bank officials, European central bank officials, indicating that they may be willing to cut rates as early as this June. And in the interest rate futures markets, we had Raphael Bostic of the Federal Reserve speaking today, saying that inflation seems to be on a path to the Fed's 2% target. We'll have Bostic again speaking at 11:05 Central Time. Also coming up against the January 31st FOMC meeting, still looks like the Fed will not change rates at that meeting, with a 3% probability of a rate cut, 97% probability of no change. But the one thing that has changed a bit is the probability of a rate cut at the March meeting. Last Friday, the probability of a rate cut there was at 80%. Now that has diminished dramatically. Now only a 55% probability that the Fed will be cutting their Fed funds rate by 25 basis points at that March meeting. So I'm still of a mind to believe that the Fed will be rather slow to cut rates this year. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.